This is Anne-Marie Leake, Vice President of Communications for ePayResources. Welcome to the Payment Space.
I'm pleased to welcome Angela Murphy, also known as Payments Elsa, and Vice President of Marketing and Solutions at Pidgin, to the Payment Space podcast brought to you by ePayResources. This is being recorded live at Notch's Smarter, Faster Payments 2024, and I'm your guest host, Peter Davey, the Payments Jedi. Welcome to the show.
Thank you so much, Peter. I'm excited to be here.
So tell me a little bit about your role at Pidgin and what you guys are doing for the payments industry.
So I'm relatively new in my role to Pidgin, though not to the industry, and what I'm able to do for Pidgin is to help with the go-to-market strategy and the storytelling aspect about faster payments, and that can be for financial institutions, for the practitioners within those institutions, or for their end users, be they customers, members, clients, corporates, etc. Pidgin occupies a unique space in faster payments because they're a connector to both the RTP network and also to FedNow. It's a one-stop shop to enable a financial institution to flip a switch and have access to both of the rails directly within their own ecosystem, regardless of size.
So it seems like something that's really helpful to try to drive the industry forward. It seems that there is a growing pressure among financial institutions to have a strategy in place to address instant payments. And I think some of that's caused by the Fed being out there pounding the sand on the marketplace, trying to get people rallied around it. Some of it has to do with the fact that we now have some maturity to the first system that launched, RTP. So what are you seeing in your space, and how are financial institutions looking at this opportunity?
Well, especially here at Notch, I've had the privilege of speaking with a wide range of financial institutions, all shapes and sizes, asset sizes, corporate credit unions, bankers banks, traditional banks. And I've definitely felt, particularly around like product teams and those who are working on innovation, and even in treasury in some cases, they're seeing that the hockey stick is here. So when FedNow launched back in July, and last year when we were all kind of having this conversation of how many people are really going to join, what's the network going to look like, there was a lot of reticence and hesitation. And now that more people have been jumping on board, even though it's mostly receive only, it's raising a lot more questions of how is the network going to continue to grow and change once people start enabling send and enabling request for payment. And what I find to be most interesting is that we have a unique opportunity now that financial institutions are like, oh my gosh, we have to have a strategy, please help. We, as thought leaders, can step in and say, well, here are a couple of things you need to be thinking about. Here are some solutions providers that you could be interacting with that are trusted and have already done these implementations, because they can be fairly complex and time-consuming. And then we can also help them with the storytelling aspect of how are you going to sell this and enable it for your customers once you have the technology in place.
So you talked a little bit about the majority of financial institutions coming onto these networks are really focused in on the receive side. Obviously, that doesn't create any revenue for the financial institutions. As you kind of think about Pidgin and some of the work that you're doing to financial institutions and go to market, are you seeing more of an urgency on the send side, or there's still a lot of cautiousness around that?
I think that there's still a little bit of cautiousness, but what we're trying to do at Pidgin and what I'm trying to do in particular as Payments Elsa is to help financial institutions see that payments is an opportunity for revenue. So it's about optimizing costs and driving revenue. That's what payments can do. It's a horizontal piece of an organizational strategy for an FI. It's not just in treasury, it's not just in consumer, it's not just in corporate or SMB. It really does underpin most of your engagement with your end customers. And so one of the unique things about Pidgin, and something that I've been saying is necessary for years, is FIs need to be able to determine and also show their customers what the best payment option for that particular payment is. Does it need to be an ACH? Does it need to be a wire? Does it need to be a RTP or a FedNow and show not only the time that it would take, but also the cost to the user and the cost of the FI to execute that payment. And once you start pulling those levers back and forth, then you can optimize your strategy to drive revenue. And that's where the send side comes into play.
Yeah, it seems that we are, a lot of cautiousness in the industry on the send side. I see that the clearinghouse volumes are continuing to grow fairly well. They've now started to hit millions of dollars a day and a number of days throughout their quarters. Fed is still a little bit timid to announce any of their volumes, although I hear that there may be some growth that's happening in that particular space, especially as some of the larger FIs start to use that rail in addition to the clearinghouse. As banks are really thinking about their roadmap strategy, obviously there's a lot of different payment modalities that they have access to. In that, how do they balance the fact that now they've got a new system that they also have to operate on with some of the traditional paces, and do we ever see an opportunity to get rid of any of these other modalities?
I actually am of the opinion that the modality that will basically evaporate as a result of engaging in instant payments is wire. It's expensive, it's time-consuming, it's not user-friendly for anybody that's involved in that payment scheme. It doesn't really provide a lot of benefit for anyone who uses it. And so I think that while we would all love to see check meet its imminent demise, that's going to happen after wire essentially goes away.
That's an interesting point. So as we think about wires, obviously there's a fairly large lift going across the industry. CHIPS just launched with ISO 20022 for wires. Obviously they do a lot of cross-border type transactions on the CHIPS network. FedWire is gearing to update their standard in 2025 to ISO 20022. But what I'm hearing from you is that potentially as financial institutions are looking at their strategy, they should look at potential migration of wire volume into an RTP or a FedNow type solution, as opposed to really focusing on the growth in that space. Is that what I'm hearing?
That's what my suggestion would be. And of course it depends on your financial institution. The primary question that I ask FIs when they come to me is do you know what your payments volumes are per modality? How many transactions and how much money? And then break that down into your customer base. Who's transacting how and why? And with wire, I think that it's just the lower hanging fruit to push those transactions, especially as with RTP and FedNow, they're starting to increase the limit of the transactions themselves. That as those limits continue to grow, that will push wire kind of out of the equation, particularly in supply chain and B2B.
Yeah, and I think for the listeners, some of you may be saying, "Wow, that sounds a little bit out there." And I think for some people it does. I mean, people look at wire and they say, "Hey, that's a good revenue generator." But one of the things that I've mentioned in the past, and I know you and I have talked about, is the fact that there's actually more value in an RTP or a FedNow transaction than there is a wire transaction. There's more traceability, less customer service costs. So I think it really is a smart strategy for people to start looking at that migration, especially as it concerns smaller dollar transactions that may be happening over the wire system today.
Yeah, exactly.
Well, good. So we're at Smarter, Faster Payments 2024. What are your impressions? What are some of your key takeaways?
I had a couple of key takeaways since arriving here a couple of days ago. It's been really great to kind of hear the different perspectives. What I find to be super interesting is this increased focus on ESG. So 2 years ago, when you went to conferences, you barely heard anything about it, and now we're seeing more panels about ESG, more panels about sustainable financial behavior, looking at the investments that the big banks are making into ESG initiatives. And so that's a shift in the conversation that I wasn't really expecting this year, but I'm pleasantly surprised, because I think as we're looking at RTP, FedNow, earned wage access, accessibility to capital, that those two conversations map pretty seamlessly onto each other.
Awesome. Well, I really appreciate your time, Angela. Thank you for joining me on the podcast, and hope you have a great rest of the conference.
Yeah, same to you. Thanks.